Hi, Greg Lewis, MetaStock Software. You're about to watch one of the presentations from the 2017 Online Traders Summit. I know you're going to enjoy it. Before we begin, I want to tell you just a little bit about us here at MetaStock. We've been in business for about 30 years. MetaStock is about the most powerful platform you can get for the private trader anywhere. You can test, you can scan, you can forecast, you can customize to your heart's content. It's an amazing piece of trading technology. If you'd like to get a free extended trial of MetaStock, I encourage you to go to metastock.com/traders-summit 3-for-1. That's metastock.com/traders-summit 3-for-1, or just click one of the links provided, and you can get 3 months of MetaStock for the price of one. That's an amazing deal. I encourage you to do so. I know you won't regret it. Please enjoy the presentation and successful trading.
The next speaker that we've got, TJ, is Vince Vora. Vince is been a partner of ours for quite a few years now. Here's what I like about Vince, because I'm going to tell you what I like about him. Vince is very thorough. He has usually has a lot of really detailed explanations in what he likes to show. And he's an all-around one of the most down-to-earth guys I've ever met. A very, very good technician, really likes to tinker around with methodologies and indicators and systems, all that kind of good stuff. And I usually, you might think as we go throughout the day and I'm introducing these people that I'm overly generous and that I really speak highly of these guys, but generally the reason they're here is because they're people that I respect and brought in today specifically to give you a class. So I do like all of these guys. Vince is certainly no exception, and just a great technician. Vince, let's bring you on.
Hey, Jeff, can you hear me?
Yeah, I can hear you.
Excellent. Thanks for having me on.
You're welcome. I just sent you the screen controls. I'm going to let you know when I can see your screen. While that's coming through, is there anything in particular that I missed during that glowing introduction for you?
No, the one thing you miss is the reason why all of us show up to these events is because you're actually great to work with, and I'm not just trying to flatter you at all. I'm serious. Me and Jeff have, especially a few years ago when we started working together, we spent a lot of time working together while he played a big role in designing actually the system that I'm going to share with you today, and got to know him quite well. We've met several times in person at different events, and not just you, Jeff, but everyone at MetaStock has been really great, not only to work with, but have been great partners. So thanks again for having us back on.
Of course, but you were supposed to talk about you. Anyway, I'm going to get out of the way. The floor is yours, man.
All right, excellent. Thank you and welcome, everybody. It's good to see such a great turnout on a Saturday. Thanks for spending time with us. We'll try to make the most of the next hour or so. I'm going to be talking about Voracity. It's one of my babies, something that took me, about 20 years to put together, believe it or not. The core of the system came together in a few weeks, but then I spent many years testing it and tweaking it, and finally got it to the point where I'm really not quite sure I can get it any better than this. So we had Jeff and the team at MetaStock program the indicator, and I'm really happy to share that with you today. As Jeff said, I am the head trader here at Trading Wins. I've been doing this for a little over 30 years now. It's gone by like a flash, but I have developed Voracity as well as several other systems and trading plans that are now not only used by retail traders such as yourself, but also several hedge funds and money managers. Please do remember that trading can be risky, so please don't trade with real money until you're completely comfortable with the system that you are using. Now, in today's presentation, what I'm going to start with is something that I start with at most presentations, and that's my money management rules. This is a key part of trading, period, but especially trading with my systems. Without the trading plan, really the system wouldn't be anywhere near as effective. The money management rules control risk. That's mainly what they're there for, and allow you to profit from your trading while risking a very, very small amount. I'll explain in detail as we go through each of these rules in just a moment. Then I'm going to talk a bit about the components that make up this system. And it all started with my search for the Holy Grail. I'm sure many of you have gone through this. And only to figure out there is no such Holy Grail. But like I said, I think, excuse me, I've gotten this system as close as I could, and I'm happy to share it with you. Then I'm not only going to talk about how it works and why it works and show you many, many examples, but talk about how this can work for you. And if we have questions, I'll try to answer as many along the way, but if not, we'll try to set aside a few minutes at the end to go through that. So let's get started with the money management rules. And the first one you'll probably laugh at, but it is no laughing matter. It's serious. Trading, really, the only time a trader makes mistakes is when they're not focused or they're not feeling well, that sort of thing, when they're distracted. So what you want to do when you sit down to trade is make sure you turn off all distractions, make sure you're feeling well that day and feeling positive. It makes a huge, huge difference. And this is, of course, just a starting point, but a very key point of the money management plan. Then, the point I always like to make to my students is that trading's really all about how you manage an order once you're in it. It's not so much picking the entries and the exits. The system I'm going to show you will tell you exactly when to get in and when to get out, but it's how you manage that order once you're in it. So you won't be able to do that if you're worried about the amount of money you have in that trade. So the biggest part of this money management plan is you trading with an amount that feels completely insignificant to you. Now, for some of you, that could be a couple $100. For others, it'll be several thousand. The amount doesn't matter. What matters is that it feels insignificant to you. That way you can remain calm, you can think clearly, and you can manage that trade the way you're supposed to manage it. It makes a huge, huge difference. Now, one of the ways we like to control our risk whenever we're in the market is to make sure that we never place more than 5% of our overall account balance in any one trade. That way, if the trade completely blows up on us, it won't hurt us that much. Okay? Now, when I show you the system and you realize just how small the risk is, you might tend to relax a little too much. And I don't want you to do that. I want you to always go back to the money management rules and follow these religiously, okay? Now, there are always unexpected events that can happen in the market. Those black swan events like a 9/11, for example, something that as traders, we have absolutely no control over. And that really should put some fear in you. There are things that you cannot control. So how can you control it? What can you do to protect yourself from such an event? Well, one of the things we do is to keep half of our account balance in reserve. In other words, in cash at all times. Now you may think, wow, that's half my account sitting there earning nothing. But there's a real good reason for it. And think back to 9/11. When those events happened, they happened pre-market. The market never opened that day. They remained closed for a week. And then when they reopened, everything reopened at 50% of where it was the week before. Okay, so if you had been following this rule, even if you had taken that full 50% loss based on your portfolio, it would have actually only been a quarter, right? Because you've only got half your account in there. So you would have lost the half of the half. You'd still have plenty of money to put back into the markets and make up that loss. And if you remember, 6 months after 9/11, the markets were right back where they were before. And when you see the system that I'm going to show you, you'll realize that really, I'm not making this up. you'll have a chance to test it for yourself. You'll see just how quickly you'll be able to make it back. Now, last but certainly not least, you do need to spread out your trades. As we've seen many times, we can have a strong day in the market one way or the other. It could be up 300 points, it can be down 300 points, but the very next day, it can completely reverse course and go the other way. So on a day where, say, the Dow, the S&P, they're all up strongly, and we've had many of those lately, you're going to get multiple trade setups. If you jump in and put in 6, 7, 8 trades at a time, and the very next day the market retraces on you, you're going to find yourself in a huge hole. So what you want to do is, out of all the setups that you see on any given time period, you want to select the 1, maximum 2 highest probability trade setups. Okay, and we'll talk about how to differentiate from one to the other as we go through the presentation. But if you select the 1 or 2, and you do that, and you spread them out from day to day, or if you're a 5-minute trader, a 1-minute trader, then you just got to spread them out throughout the day. But regardless, spreading out your trades really protects you in the end. So what I can tell you with certainty is, if you follow these 5 rules here, you will never, it's almost impossible to take a sizable loss if you follow these rules. Okay, now I'm sure there'll be a recording sent out, but if not, please make a note of these. Focus. If you're not feeling well, turn the laptop off, trade another day. When you do trade with an amount that's completely insignificant to you. Restrict any trade to maximum 5% of your balance at any one time. And if you have a larger account, or I should say, as you grow your account and it gets bigger and bigger, you want to reduce this percentage, believe it or not. Not go the other way, but reduce it. Bring it down to 3, 2, 2.5. If you can get this down to 1%, it'll be even better. You'll still have a sizable trade on, but the amount of risk you're taking is minuscule, right? It's really minimal, and you'll really be able to relax and follow your system. Never activate more than half your account at any one time, and spread your trades out. Now, a couple other sayings we follow here, and this one is really meant for those of you who are just getting started out, okay? You'll never go broke taking profits. What I mean by that is, again, we take a very small amount of risk. So even if you don't stay in the trade for the full run, okay, get used to banking those profits, because as you gain experience, you will learn how to remain in a trade a little longer. But at the beginning, it's extremely important. When you're just starting out, that's when your emotions are going to come into your trading the most. As you gain experience, you'll learn how to deal with your emotions. But at the beginning, get used to banking those profits. One reason is it'll give you more confidence in yourself and in the system that you're trading, but it also is going to help you slowly but surely grow your account. And then once you grow your account, you have a little more money to play with, you'll be able to relax a little more and have a lot more flexibility, okay? And lastly, but this is the most important thing, if you walk away from this webinar with just one thing, I want it to be this. You have to remember to check your ego at the door when you trade. This is not about you. This is not about whether you are right or wrong. If you're in this to walk around talking about how you are the greatest stock picker on earth, you're in it for the wrong reasons, and you're going to be disappointed. This is all about controlling a trade. This is all about how much money you make when you're right versus how much money you lose when you're wrong. In other words, it's about execution, right? So with a plan, which I'm giving you today, you will be able to create a checklist before you get into any trade. The things that you must have or you must see on your chart before you get into a trade. If you can tick off every box and you get into that trade and it ends up being a losing trade, it is not your fault, okay? It's the cost of doing business. That's what it is. That's all it is. There is no perfect system. You will have losses in your trading. What you need to make sure of is that those losses are not because of a mistake. If you are not disciplined and enter the trade regardless of those boxes not being able to be ticked off, and then you're just asking for losses. Follow your plan, okay? If your plan isn't working the way you want, you can tweak your plan, but follow your plan, follow your rules, and in the long run, you'll be extremely, extremely happy, all right? So check your ego at the door and just follow the plan. Now let's talk about the system, talk about Voracity. So this came about many, many years ago when I was in the early stages of my trading. And I'm not going to go through the whole story, but like everybody else, I was looking for the perfect system and spent a lot of time adding indicators, removing indicators, and so on. And what happened at first is that I added several indicators, excuse me, oscillators, you name it. And when all of those lined up perfectly, man, it was almost perfect. I could almost guarantee myself a profit. The problem was I had so many indicators and oscillators in there that the likelihood of finding a setup was very difficult. And in other words, they were very far and few between, very few trades over the years. So what I started doing was peeling off indicators and retesting. And what I found with the final combination that's in here is that I can still be very active and still have most of that accuracy. So it is extremely accurate and consistent through all types of markets, all time frames, all instruments. So you can trade this with stocks, futures, Forex, any time frame, any market. I've traded here in India, Asia, you name it, all over the place. It's based solely on technical analysis, all right? And so it works extremely well across the board. Now, I know how well it works because of all the back testing I've done, along with all the forward testing. By forward testing, I mean testing with real money. And I've been trading with this for a long, long time, and it has been extremely consistent for me. But what can it do is the question. What it's designed to do, unlike several of my other systems, because all of my systems are really based on two things, trend and momentum. When you're trading with a strong trend in place and with momentum on your side, more than half the battle's already won before you even enter that trade, all right? But this system, the Voracity system, unlike our others, is truly designed to catch the bigger moves, okay? Now, the real benefit here is that you don't sacrifice the risk level. In other words, usually risk comes with reward. The bigger the reward you try to get, the more risk you have to take. That's where this is a little unique. This still will maintain a very, very small amount of risk for you, okay? It keeps your losses very small without capping your upside. This is what took so long to design. So the real benefit of Voracity is that it maximizes that safety component in the trade. It will highlight on your chart the very safe areas to get in, and I'll show you all that in a moment. But what can this do for you? Well, it's gonna not only help you find some great trading opportunities regardless of the time frame, short, whether you're a swing trader, whatever market you trade, but if any of you are managing a retirement type account, a longer term account, right, an IRA or any other one where you plan to hold a portfolio for a long time, one thing that I can guarantee you is any system that's based solely on technical analysis like this one, the higher the time frame, the more accurate it becomes. And I'm going to show you several trades here that will surprise you. But if you're managing those longer term accounts, you're going to love this. What it also does is help you predict major market moves, and you can use those higher time frames to do that. Let me bring up my MetaStock platform and now show you and walk you through this, okay? Now, before we actually add on the Voracity indicator, what I want you to understand, like I said before, is having a trend in place is extremely, extremely important. And then having momentum in place is just as important. So what you want to do to begin with is build a portfolio of stocks or Forex pairs or futures contracts, whatever you prefer to trade, but build a watch list of items that are trending strongly in one direction or another. The direction really doesn't matter, but it has to have a strong trend in place. So if you look at Intuitive Surgical here, ISRG, very, very predictable. With one quick glance, you have no choice but to say this is going higher, or it's most likely to go higher. It is very, very, it has a very strong trend in place and momentum as well. Now you can judge momentum one of two ways: by the price bars themselves, or put something on like a 20-period simple moving average, and it'll really draw that slope in for you. If you have a 20-period moving average that's sloping in your direction, then you have momentum as well. So it's very easy to spot, very easy to do. But if you try to trade here, chances are no matter where you pick your entry, you're going to do all right. Right? Now let's look at a different one. Let's look at BMRN. Okay. Now you tell me, where's this thing going next? And if you had to try to find a spot to enter a trade in here, what's most likely to happen? Right? What's most likely to happen is that you're going to get stopped out, no matter where you're trying to get in, because of the volatile nature of this chart. It's just all over the place. It's one big chop zone, right? Back and forth, and that's the real problem. So always focus on charts. Here's another one, Applied Materials, right? That's been doing very well this year. Just a nice, slow, steady climb higher. You'll notice that the candlesticks are all very similar in size. It's just a nice, easy chart, very predictable chart to trade. And that's really the starting point. That's what you need. Now, when you throw on Voracity, and I'll explain what these arrows are in a moment, this is where the system kind of holds your hand and tells you when to get in and when to get out, etc. Now, first thing I want to say about Voracity is that the intent here is not for you to take absolutely every trade it highlights. Okay? Unfortunately, to make sure that we capture those bigger moves, there were certain parts of the program we had to leave in there that will at times give you entries where you should not be entering. But along with this indicator comes a recording of a pro class on Voracity, where we explain exactly which setups to enter and which ones to not. Okay, so we don't just leave you on your own trying to guess, but we tell you exactly what to use and what to look for, and know when to get in and when to get out. But you can see that what it does is capture most of the big moves. All right, so if you look at this run, aside from maybe this small part here in February, it pretty much caught the full run, right? And even if it's taking you out and getting you back in quickly, I mean, commissions these days are insignificant, really. They're not like they used to be before, where you'd have to pay $75 or $100 a trade. Now you're talking about a minuscule amount for commissions. So, but it's designed to not only highlight the safe areas on the chart to trade, okay, but it's designed to capture those big moves, okay. And so whether you're looking on a daily time frame, right, a weekly time frame, have a look at those moves it captures on the weekly, right, or a monthly time frame, right, there's that big move. And this is what I was talking about earlier, how you can use it to predict major market moves. If you start with the monthly, the highest time frame, and you've got a nice setup in place here, then it's a matter of turning to the lower time frame and just picking off every new setup in that direction. So in other words, if Applied Materials has got a long trade in place here on the monthly, you're not going to go to the daily chart and short it, right? You're going to go long. It's just a matter of when and where. And again, the system will tell you exactly when and where. So in here you have these little green or red diamonds, the green or red arrows, and these little green or red exit flags. So the diamonds alert you to the potential of a trade setup. Okay, they are the setup. They're not the trigger to get into the trade. It's just a heads up that, hey, there may be a trade coming. Now, if it's followed by the arrow, now that's confirmed. That means it's confirmed and you should enter long. And whether you enter by buying the stock, whether you are buying a call option or buying a call spread, selling a put credit spread, and there's many ways to do it. But any way you're comfortable with, you want to go long when the arrow appears, okay? And exit when the little exit flag appears. Now, along the way, when you have a nice stretch like this, okay, you know, you can, depending on your risk tolerance, you can just enter here and exit here. What I prefer to do is scale out along the way, okay? So, and you can use previous high pivots as targets. You can use your fib extension tool. There are many ways to do it. You can just use a dollar amount that you're comfortable with, right? If you get in here and you have a $500 profit and you're happy with that, you can take it. But if you're trading with multiple shares or multiple option contracts, say I've got 10 contracts on here, you know, I can take 3 here, take another 3 here, and let the final 4 run, that sort of thing. You can decide. We go into more specifics in our courses, but there's a number of ways you can do it. But obviously, you don't have to hang on for the full ride. But what you will find is that Voracity will keep you in for the bulk of that run. Okay, that's what it was designed to do. Let's look at a few more examples. Who trades Apple here? I mean, I'm sure it would have probably been easier to ask who doesn't trade Apple, right? The list would have probably been shorter. But if we look at Apple here, let me save this as the default. There we go. So have a look at Apple on the daily chart. There are these nice runs, right? And this is key, and this is one of those things that you can use to differentiate trades. So in other words, let's say I have 3 or 4 different setups that I want to choose from, but I want to choose just one. That slope in the 20-period moving average is crucial, okay? That tells you there's momentum, and the more momentum you have, the better. In other words, if you have a slope that's like this, that's not much momentum. Like this is a little better. The higher it is in the direction of your trade, the more momentum you have in place. It's like having wind at the back of those candles, just pushing it forward. It is absolutely crucial. And if you, as I'm going through this, keep an eye on the arrows that appear when that 20-period moving average is sloping in the direction of the trade. So if there is a green arrow and there's a slope upward on that 20, have a look at how many trades are winners compared to how many trades are losers. If you follow just that one differentiating factor of that slope in the 20, you're going to do extremely well with this strategy, okay? Now, sometimes it will appear where the moving average is flat. Like I said, the intent here is not to take every arrow. There are reasons or rules that I will give you in the recording that comes with this that explain exactly which one of these you do want to take and which ones you don't. But like I said before, if you eliminate all of the ones with a flat moving average and you just look at the ones that are sloping, you're going to do extremely well. And again, whether it's a daily, a weekly, here, look at those trades. It captures all those big moves. So remember, the reason why we're trying to keep our risk low, it's not just because we hate losses, and believe me, I hate losses. I don't know about all of you. I don't know how many of you have taken big losses in the past. I'll be the first to put my hand up and tell you that when I first started, I took a massive loss in the markets. Before I truly knew and understood how to trade, I got whacked hard. But that's really, I think, looking back, it was the best thing that could have happened to me. Because that's really why I've become so risk averse and why I've designed these systems this way. I'm scared to death of ever taking a loss like the one I took when I first started. But I can guarantee you with the rules I follow, I never will take another such loss. So and that's what's so important here. But the key to this system, what really makes it different, is that it doesn't cap your gains. So what you will find, or I will tell you what my experience has been, way more winners than losers, but the winners are way bigger than the losers. So with that kind of math on your side, it's kind of hard to go wrong. Have a look at the monthly chart of Apple. There are those nice big runs. You're not going to catch everything. You're not going to catch everything, okay? But you will catch the bulk of it. And even, how many of you are intraday traders? How many of you day trade? Whether it's a 1 minute, a 5 minute, here's the 1 minute, right? Remember, look at the arrows for the ones that are sloping, okay? Trades like this, these are no-brainers. These are easy, very, very safe to trade in this area. There's another one here, okay? We can look at a 5 minute. Who trades off the 5 minute, right? And you've got trades there. Now, you can even try to incorporate this with many other things. You can look at specific charting patterns with this. You can only take the trades that are, bouncing off a level of support, that sort of. There's a lot of other things that we teach with this, and a lot of things that you can incorporate in this. But just sticking to the signals that come with that slope, I guarantee you, you'll do very, very well here. Let's continue on and look at a few more. Who's been trading NVIDIA this past year? NVIDIA has been on a massive run, right? Let's have a look at NVIDIA. See how the system would have done on NVIDIA. There it is. That's the daily chart, right? Again, the bigger moves, it catches. Okay, almost all of them. Let's look at the weekly. Here, beautiful. So you see, all along here, while it was consolidating, it was giving signals. I guarantee you we would not have taken any of these, and there are some very specific rules behind it. But you can rule it out, okay? You can rule it out just by looking at the slope of that 20. It was flat. Then it started to slope a little. Even here, you could say, it was flat. But here, you would have gotten in for that run, right? Let's look at monthly. Let's see if it makes any difference on the monthly. So all flat. You get a little slope, boom, you get a nice move. And this may look like a small move. It really isn't a very small move. If you look at this, as I highlight, as I hover over the candle, you can see that the close here was $23, right? More or less. Let's go up here, and the close was 35 at the high, right? And then even coming back here, like these aren't small moves, but look at this one. And this is what I was referring to by, if you are managing a longer term portfolio, think about this. If you focus on dividend paying stocks only, and you capture moves like this, I mean, this one went from, the 20, even at the close, 24 and a half, we'll say. Right now it's at $211. Now I know that's over a year, but from 24 to $211, and I don't even know if NVIDIA pays a dividend or not. Maybe they don't. But what if they did and you collected that along the way? What if we showed you how to sell covered calls on this along the way to bring in extra income? Think about the possibilities. That's what this is about. You don't have to spend your life in front of the screen. You just need to spend a few minutes a week or even a month if you want to trade on the monthlies and do it that way. Did I show you 3M yet? Let's see. Let's have a look at 3M. Here, let me zoom out a little, right? There's the daily. Let's look at the weekly. Beautiful. The monthly, right? Just there's those bigger moves. Captures it. Beautiful. Roy says, how well does this work on commodities and ETFs when they're trending? It works fantastic. Let's look at gold, okay? Let's look at gold for you. That's one of the symbols you put in. Let's look at the gold futures chart here and see what it does. Oops. Let's try that again. GCV1. Now let's go to Voracity. There it is. So there's the gold futures chart. Let's look at gold. Here's weekly. I'm not even sure this is the contract we're looking for. That's not the one I was really looking for, but there you go. And here, have a look. Recently, I've been talking about gold a lot in my nightly videos with the members, saying there's a bigger move coming. Now, you see how when the candles are black and white, that means there's no trade active at that point. So see back in here, right? There was no trade. Then it triggered, because it triggered a long trade, all the candles are going to be green until the exit. When it's in a short, all candles are red. So that alone, and this was Jeffrey's idea, and it's great because from a discipline standpoint, it's beautiful. It doesn't allow you to get scared out of those trades, right? You know, when you get in and you see a few green candles, then you see a big red one, and you start questioning yourself and start panicking. Well, if they're all one color, right, sort of like the Heikin-Ashi candles, it helps you remain disciplined and remain in that trade. There's also other parts of this indicator that I'll let Jeffrey show you in a few minutes, like the expert commentary and the scanner that come with this, that really are my favorite parts of this. But whether you're trading a commodity, an ETF, let's look at the ETF of the Dow Jones, okay, DIA. I don't know how many of you trade DIA. Let's zoom out. This is the daily chart on DIA, right? Weekly. There it is. Monthly. No, it doesn't matter. Let's look at who trades currencies here. Does anyone trade currencies? Let's look at a few pairs. Like, let's do the Aussie Euro, for example. Here. Aussie Euro dollar. Oops, let's try that again. AUD EUR equals R. Let's see how this would have worked. Let's zoom out. Yeah, there we go. There's some nice trades here along the way. And again, I don't know what time frame you trade, but it really doesn't matter. Okay, it really doesn't matter. Who trades the likes of Netflix, the monster stocks? I love trading the monster stocks on the hourly time frame, but again, whatever time frame you're trading on, it doesn't matter. There's the daily. There's the weekly. Here's the monthly on Netflix, right? Beautiful. Captures those big moves. It just, again, it really highlights the safe areas on your chart to trade. Now you see this trade down in here. This is actually one we would have taken, believe it or not. And when you watch the pro class recording, you understand why, even though there's negative momentum. But let's say you didn't want to. You don't want to take the added risk of having momentum against you, because you should always have a trend and momentum in place. So here, maybe you would have said, no, there is no trend, and momentum is against me, so I'm not going to take it. So be it. You missed that one. Who cares? But when it resets up and you have trend and momentum on your side, boom, you capture it. When it sets up here, boom. I mean, we're talking about going from, even at the highs here, 130, and where are we at now? 193 or so? I mean, we're not talking about small trades, right? And again, the time frame really doesn't matter. And let's try to squeeze in a few more. Let's look at LRCX. And, if you're thinking I'm cherry picking here, trust me, I am not. You can pick an index, like I've done this presentation in the past where I've gone through all the Dow components. and it just does a very, very good job of picking out those bigger moves. Okay, but you have to follow the rules and understand which one of these to take and which one to not. But it's nothing subjective. It's all very, very clear, you know, A, B, C kind of steps. Do we have this? Do we have this? Do we have this? If yes, enter the trade. If no, even if you're missing one, skip the trade. Look at LRCX here on the monthly. I mean, look at these moves, right? Beautiful. So even if here, if you were in and it gets you out and then right back in, what are you missing? What are you missing here? Just you know, a few dollars in commission, right? So let's see. Now, not every chart works well with this. One of the things you want to do when you see a setup, okay, is to look to your left, look back, and have a look at the setups that it identifies and see, does it identify nice, clean trades? If it doesn't, skip it. So a chart like BMRN, that messy one I showed you at the beginning, I can throw it on. It's going to be a choppy mess. Let's actually do that. I don't know what it's going to look like, but let's try that. Okay, let's see what Voracity would look like on this. Let's put there it is. So you see there are trades that it identifies and it works, but you see what I mean by the chop and all the, you know, you get in, exit, right? Your chances of making money on a choppy chart like this are ugly. So even if it gave you a short setup here with nice strong momentum, right? But you look back and you see this choppy mess, do you really want to trade this chart? The answer should be no. All right. Let's see. Marcello's asking for the New Zealand dollar, Japanese yen. Let's see what it would have looked like here, and if it's the kind of chart we want to trade. Let's have a look. Okay. Actually, it's not bad on the New Zealand dollar, Japanese yen, right? Let's even go back a little further. There. Capture some nice big moves, nice big swings. So you see, the cleaner the chart, the better it acts. It's been in a short here, real nice. Okay, and again, the time frame, you can trade whatever you want. So, you know, again, there's a number of different ways you can trade this, and you can really take the risk level down even further. In that pro class, what we focus on is how to differentiate one trade setup from another, so that you can decide based on your risk tolerance whether or not you want to take a trade like this or not, whether you want to take a shot at a trade in here or not. But we tell you exactly what to look for and make it very clear and very safe for you to enter. But again, what I can tell you, the track record of this, and I've gone through many different types of market environments here, bull markets, bear markets, big events, the crashes, right? The flash crashes, etc. This thing is extremely consistent. Okay, it's just a matter of trading it within your risk tolerance level, and if you follow those money management rules, you'll do well. Do not skip those money management rules. Someone's asking me for the 5-minute chart. Let's have a look at the New Zealand dollar, Japanese yen on 5 minutes. There it is. You can see here, it's on 5 minute, okay? And there are those nice swings. It's very, very clean. So the indicators and oscillators that we've built in here, these are combinations that we've tested previously in other systems and so on. Then what we've done, as I mentioned, was put them all together and then just peel a few off so that we can be active. We can be active while still being accurate. That's the big difference. Okay, this moving average that you see here is a simple moving average. It's the 20-period simple moving average. You can do it with the 50, the 100, whatever you want, but all our testing and our trading has been with the 20-period simple moving average. So if you focus on the trades that trigger with a slope in your direction, so if this is trending lower and it has a slope lower on that 20 and you get that set up, that's what you want to see. Those are the safest of the safe trades. You know, you can also focus on trades where you might get a retracement back into a proper fib level, all those other things, okay? Ahmed is asking me to go back to LRCX. Let's go back to LRCX for a second here. And in just a moment, I'm going to hand it back over to Jeff so he can show you the other parts of this indicator, because they're really huge. I mean, the expert commentary, and Ahmed, I'm not quite sure what you wanted to see, if you just wanted to see how it worked here on LRCX or if there was something else, but you can see here the daily and the weekly and the monthly are just as consistent. Now, I'll let Jeff expand on this, but the expert commentary is a window that will give you some text along with this, and it'll help you follow along a stop level, okay, and tell you ahead of time of what you're looking for to exit this trade. So in addition to these bars being painted green or red for a short trade and helping you stay calm and stay in the trade, what it does is kind of hold your hand throughout the trade. Because you see this little diamond here, this little black diamond, if you move it over a different candle, the text changes. So once you get in a trade, right, you can move it either by clicking over the candle or by clicking the arrow here, and you'll see that the text changes and it'll update the stop loss level and exit, etc. So it kind of tells you everything you need to do along the way. And then there's a fantastic scanner where you can search for different setups, and it'll save you a ton of time. So with that, I'm going to hand it back to Jeff. Jeff's not only going to expand on this a little, but he'll tell you how you can get yourself a copy of this indicator. And remember, the pro course comes with it. Yes, Jean, there are ways for this to work on a Mac. Our staff or the MetaStock support team, which are great, by the way, can show you exactly how to do that. So Jeff, I'm going to hand it back to you. I will stay on in case there's any other questions, but if you want to take over from here, I'll hand it back to you.
All right, let's do this. Very good. Good job, Vince. Turn around my headset. Yeah, turn around my headset. I had it on wrong. I do want to show this. One of the things I wanted to show is a lot of really good examples, and Vince, you did a pretty good job of that. So let's kind of get in here. I'm just going to go straight to the PowerPoint and show you how we've actually kind of organized this thing. And so you guys should be able to see MetaStock. It should start to kind of broadcast to you. And I just want to talk a little bit. This is the Dow Industrial Average. We're looking at it right now on a daily basis. And I want to give you an idea of how the implementation works. Because I think we did a good job. So one of the things that you'll notice here, because I'm going to point it out, is you'll notice that we've got little triangles on the chart. Typically, the triangles appear if there is a long setup or a short setup. So if it's a green and it's underneath the bar, you've got a long setup for the day. That just means you should kind of be aware that this stock could trigger on the next open bar. Okay. If it's up above the stock, basically what you're going to see is you're going to see a little triangle up above it. If the stock meets a condition to trigger, you're just basically going to get a buy signal. It's going to paint automatically for you. It's not going to repaint, and I'll show you why in just a second. And then as long as you're in a trade, it's going to kind of keep the bars green and identified that way for you until you get an exit signal. Now let me show you kind of how the expert commentary works with this. So if I go to view expert commentary, that's going to open up a little bit of an expert commentary. I've talked about expert commentary probably more than enough today, but when I apply this to a chart, what you'll notice is there's a bit of a black triangle, and it basically that's just telling you what day this expert is going to be analyzing. Right now it's analyzing today, the most current bar, or the most current week, last week. Okay, we are on a weekly chart right now, but right now it's looking at the last bar. So I can tell you right now, just because we had the setup that was followed by a trigger into the trade, that we are currently in a long position on Dow. We have been since roughly November of last year, which is probably a pretty good plan if you're trading on a long-term basis, right? Right now, just to kind of point out this part for you, every single time you get a new bar, you're going to get an updated stop loss. So this does a great job of kind of taking the emotions out of it. You know exactly what your game plan is. Right now, we know if if the Dow falls below 227.24 on a weekly chart, we're just going to get out of the trade. Okay. If we go back here, I can actually move this day that we're analyzing back. So if I go to a setup bar, basically I can tell you what it would have said back in November. The Voracity indicator is signaling a long trade setup. To confirm this is a valid buying opportunity, you must wait for a trade above the setup bar's high to confirm a buy signal. That's why it doesn't repeat, because it'll go up above this bar's high. If it does, it's the additional confirmation that Vince's system is waiting for to kind of go ahead and get you into this particular trade. Okay, so if we would have ran a scan on Dow, or if we would have opened up this chart last year, it would have given us this setup. The very next day, what it's going to do is it's going to say, okay, well, we went into the point where we're signaling a long opportunity. If you're interested in taking advantage of this opportunity, you should look at buying the stock, while option traders could consider these types of options. If you're aggressive, you should do this. And you'll notice from the very get-go, once you're in a long positions, traders can hold the position until the indicator divides an exit point, or exit the position at least 2 weeks before the option's expiration date. So on this particular day, we would trigger, that's our signal to go ahead and get into the market. And then on the very next bar, you're going to start to get this this stop loss value. In this case, right now it's 184.09. You'll notice that this stop value is going to update. So if I poke at different periods here, it's moved itself up to 204. So it does a good job at 214 right there. It does a good job of kind of ratcheting in those profits. It's a very nice trailing stop that'll signal your exit at the marketplace. So it does a really, really good job of that. Irene, I'm going to get to that in just a second, actually. I did have a ton of examples. I wanted to kind of give you an idea. Somebody was asking about the pound. So we're going to go ahead and jump over to the pound. I'm going to go ahead and select the instrument right here. I've been doing that all morning, actually, GBP, not GPV. I don't know why I have a mental block there. Just going to type in the symbol. Okay, I'm going to go ahead and select the instrument, and it's going to go ahead and load up the GBP pound. And you can kind of see how it's performed in the past. Right here, as Vince stated earlier, this is a weekly chart, but as you see here, not all the trades will work out. Here you got out for a bit of a minor loss. But take a look at some of these positions that happened in the past. Here you had a short trigger followed by a short entry followed by a pretty good move to the downside. Here you had another entry signal followed by a fairly decent move to the downside. Here you had probably a bit of a break-even trade. It's not perfect, but it does a really good job of identifying those trending instruments. Here you get a short trade and another really nice move to the downside. This thing is a fairly solid indicator. Here you have another couple trades. Here's a really nice trade up to the long side. This does a really, really good job of kind of just spelling it out for you. Here's where you should get into the marketplace if it penetrates this price point. Here's where you should place your stop. Oh, and now you should get out of the trade. So that kind of should give you a pretty good idea if it works. I literally have about a dozen stocks and futures. Let's just look at a few written down to show you, and we're not going to have time. Is really kind of the literal thing about it is we just won't have the time to show you all of them. But let me show you this on an S&P mini futures contract. Again, we're looking at a weekly chart. And you'll notice here we have the setup, followed by the trigger, followed by a really nice move up to the up to the upside. Here you get a trigger into the market, followed by currently long in a position. Just does a really, really good job of feeding those out to you. And again, as I've stated a few times today, one of the things I love about MetaStock is, let's say you're an option trader. Or let's say you're a currency trader, or let's say that you're trading the NSC. We had somebody that was interested in the NSA earlier. You can use our scanning capability, and it can literally go and build a list for you of all of the stocks that are available in a specific marketplace. So what that means is right here we've got the Voracity. We've got two different scans built for this thing. We've got the setups, The setups, what that's going to identify for you is where you've got a setup on a chart. So it'll find it right before the trigger day. Okay, so that way you can kind of go in and look at the commentary if it's something that you want to put in an order. Hey, buy when it goes above this price, you can do that, or you can watch it during the day. It's a way for you to go in and kind of actually do a setup scan. It's just looking for the ones that currently are just waiting to fire. Okay, this Vince Voracity signal scan is actually looking for anything that's actually triggered already on the current bar. So if you were kind of doing a scan after the market's closed, you want to find something that actually already hit. Or let's say you're doing a scan during the day and you want to find just something that's hit today. You can do that. You'd run the signal scan, and it would go through whatever list you give it, whether it's the optional bulls or the NSC or the futures or the Forex, and it'd give you a list of all the stocks that either had that setup or the signals. I want to show you real quick what the actual report looks like. So I ran this earlier today. It took just about a minute or so on the S&P 500. Now, one of the things is the Voracity signals didn't give any actual results. Everything was filtered out. So I automatically don't have to look at 500 stocks. I know none of them have an existing signal exploration or an existing signal in the chart. But we did have some setups, so I can show you exactly how that looks. What I'm going to do is actually right-click on here and just show you the report. So right here, out of the 500 or so securities that I scanned in the S&P 500, right here you're just going to get a list. You've got a column right here that's labeled long, you've got a column that's labeled short, and you've got a close, along with a calculation that we put together that's called a slope calculation, which just tells you if the moving average is sloping up or down. So I can sort these all based on if I want to go long, let's say on Monday in this example, and I'm going to have about a dozen examples that I can look at and their corresponding slope values. We won't go into the calculation of what the slope is exactly, but what I can say, just for time, really, but what I can say is the larger the value, the more that your moving average is going to be sloping up. So that's another way we can say, okay, gap, give us a signal. It's got a slope of about 3.4. That's pretty good. Maybe I'll look at Helmerich Payne first and see I like that because it has a slope of about 5.34. But you can see how this kind of allows you to focus on the opportunity, skip all of the junk that's out there, and just see what's available as an opportunity today in the marketplace. I'm going to go ahead and mute a few of the extra microphones here. We're getting a little bit of typing, not from me, but that's how it works. Again, such a simple system, and it's almost elegant in the simplicity that it has. It's going to give you that setup value. It's going to give you exactly where your stop loss is, and it's going to tell you when to get out of the stock. And if you don't have a signal that day, you can scan for them. You can find those opportunities that exist in the marketplace. Such an elegant way to kind of implement it and save you time while you're doing it. So the Voracity template, basically the system includes like the template, the setup and trigger exploration that I just showed you, the expert advisor that gives you all those alerts and those commentaries, the stop loss values, all that kind of stuff. Everything that I showed you basically is included. Normally this program is a one-time cost, so you pay for it one time. You pay $19.97 for it. If you want to buy it for the summit, as a summit special price, it's only $1,000. Now I want to stress the fact that it's not an ongoing cost. You pay for it once and you own it. And I want you to kind of do a little bit of math. How many really good winning trades do you need to actually make $1,000 bucks? As Vince mentioned, maybe I'll take a class in alliteration. But as Vince mentioned, it does come with some training to help you get up and running. If you need MetaStock, we'll include a license for 3 months at that price. It'll actually give you access to either the real-time or the end-of-day version of MetaStock. And so you can give us a call. We can send you some more information. We can get you set up. It comes with a money-back guarantee of 30 days. So That gives you a month to actually play with it, make sure you're comfortable with it, make sure that it's really going to take your trading to the next level. We back everything we sell up with a 30-day money-back guarantee, as everything that we sell on a one-time cost. So give us a call if you have questions. It's 800-882-3040. You can visit us online at metastock.com/saleschat to take advantage of that. I'd recommend you give it a go. It's one of our most popular products. As I mentioned a little bit earlier, we are going to talk about 4 different add-ons today. We do have a summit special where you can get all of them for 3 months, as well as own Voracity and the Barry Burns Top Dog Trader Toolkit. Normally, all of that would cost you about $3,000. The special pricing for the summit is $1,599. Again, the phone number is 800-882-3040. You can visit us online at metastock.com/saleschat to take advantage of that. And I want to thank you in the spirit of Thanksgiving. I want to thank you for coming. Vince, I want to thank you for your time. We are 2 minutes over, so we're going to move right on. But before we do, we're going to talk about stocks and commodities, our sponsor for the event. Great partners of ours. They've been kind of sponsoring the event since we started them. I can't remember. I think we started them about 4 or 5 years ago. And it's been a very, very successful summit, mostly due to all of you guys coming and being part of it and all that kind of stuff. So thank you for coming in today. We appreciate it. We'll talk a little bit about MetaStock. It's been rated #1 25 years in a row. Talked a little bit about scanning and the real-time alerts and commentaries. We will go into more detail with that. I'm actually doing a full session on it